Welcome back to the Seven Figure Flipping Podcast. We have a ton of stuff going on in the real estate market today. Lots of predictions coming out, lots of economists talking about what's happening in the real estate market, what they expect to happen in the real estate market. So I wanted to share with you today some of our thoughts, what we see from an investor position. Realtor.com's economist did a 2025 market forecast, and I'll tell you what, it's a master of the obvious. Inventory is at an all-time low. It's not the lowest it's been in the past 4 years, but when you look across 10, 20, 30 years of real estate data, it's still very low on inventory. However, it's the highest it's been in the last 15 years, which means we're starting to see houses come on market. The problem is that we're not necessarily seeing a move in some markets. Here's an interesting fact outside of realtors' projections. Even though the inventory has increased to a high of the last 15 years, 40% of that increase actually came from the state of Florida and the state of Texas. By the way, these are two markets that also grew more than almost any other market in the past 4 years. So they grew in price, they decreased in inventory. Things would go on the market, be gone in one day. They'd sell $100,000 over ask, which drove prices way up. 50% increase in prices. In some cases, prices doubled in values over a 2 to 3 year period. So real estate's very local. If you're in the Midwest, it doesn't hurt as much. But what is the thing that Realtor.com's economists are saying is they don't expect the interest rates to really change much. So yesterday I looked, we were sitting at 6.87. So we're hovering right around that 7% mark. The Federal Reserve is projected to do a few more rate cuts throughout the next year, which haven't proven to date to have a meaningful decrease on mortgage interest rates. So we might get down to the sixes. Even then, the interest rates are high. So the interest rates are high. The prices are high. It has an affordability problem, which means there's not going to be as many buyers willing to go out and buy properties. So although there are a lot of buyers who need to buy properties, the millennials who are coming to age, having families, the older folks who really want to downsize from larger houses, unless they can pay cash, coming down a property size or buying your first property as a millennial starting to have kids just really isn't in the cards for a lot of people. So there's a lot of really pent up demand, but it's not translating to action because we haven't seen the needle move on interest rates and we haven't seen the needle move on the price of houses in a meaningful way. So if a $200,000 house over the last 3 years now is a $400,000 house, even if that has come back to 380, 360, 370, that's such a massive increase. Wages have not increased on pace with the affordability housing. What I mean by that is people aren't necessarily making double the amount of money they were making 3 years ago. So if I worked at a factory making $60,000 a year 4 years ago, even if I get 10% raises each year, that's like bringing me up to 60, 70, 80, maybe $80,000. That's not going to take me to $120,000. My income isn't doubling like the housing price has doubled in many areas. So there's an affordability issue. The interest rates are making the monthly payments high in combination with the high price of the houses. So where do we win as investors? And what can we do with the high interest rate markets? Well, the good news is as an investor and those in our seven-figure flipping community, we are literally experts at buying houses at a price that makes sense, typically at a discount at 50, 40% of the appraised value. So you win at the buy. And last year I stabilized 6 units up in the Midwest, and I purchased them with investor money, rehabbed them, full rehabs, and then I refinanced them. The quintessential BRRRR strategy. People said you cannot BRRRR today. You cannot be cash flow positive. I'm net cash flow positive on those 6 units, $2,100 a month. I did burn out of those units, and I have interest rates over 7% on those right now. So you can do it because you win at the buy. If you buy the property at a good enough rate, at the cheap enough price, you can win. You might say, oh my gosh, I can't find a property that cheap. Nobody would ever sell me a house that cheap. Well, that, my friend, is what we call limiting belief, because we've bought thousands of houses at 30, 40, even sometimes 20% of what the fixed up value will be. In fact, in 2022, no, maybe 2023, one of the two, a lady called us in the Panhandle of Florida and said, you can have my house. And I kid you not, we put $1 on the contract. We actually wholesaled that house for $30,000 to another investor who was going to make it a rental. It was worth about $120,000 as it sat. So if you don't believe you can get a house at a great price because you can solve somebody's problem, you have a belief problem. You have a mindset problem, because it's happening every single day. So in spite of the largely stagnant housing and interest rate market, maybe prices are pulling back a little bit, interest rates come down a little bit, but by and large, we are where we are, probably for much of 2025 and probably also for much of 2026. You might see, and economists are predicting, around a 1 to 3% appreciation nationwide. Some markets certainly will go up more and some will be negative in appreciation. To me, that's very stagnant. That's not meaningful. That's not going to really change what we do. We're not going to bet on appreciation because that's not something we control. Okay, here's the kicker. There's a couple nuances in the market as we go forward. Rents will probably drop slightly. They've also overheated, but that wouldn't really concern me too much, because they're not going to drop in half, right? They're going to come down 50, $100. It's not going to change really what you're going to do with the rental. But the real thing to key in on is understanding the new construction market and what competition you have, particularly if you're a flipper, if you're going to rehab a house and try to sell it. Okay. The reason why new construction is important is because the people who can buy today oftentimes are getting builder credits that you cannot compete with. So they can buy a brand new house, say in Florida, for $400,000 or $500,000, and the builder is offering lending at 4.99%. I see it all the time, which is more competitive than the 7% you're getting in most other places. So that's problem number one. They know they can get a cheaper monthly rate. The builder's also offering credits towards closing, tens of thousands of dollars, meaning that you have to bring less capital to close that property. So you think about this from a consumer sentiment perspective, and I got to choose between your beautifully flipped house at a 7% interest rate for $300,000, and I can buy a brand new house right by it, have a cheaper monthly payment, pay more for it, $400,000, have a cheaper monthly payment, a cheaper interest rate, and bring less money to close. Which one do you think people are choosing? Of course, they're choosing the new house. So as you're selecting your market, and as you're looking at your market and comping your properties to see what they're going to be worth on the back end, you need to pay attention to new build competition. That is going to be a key component to winning with profitability in 2025. Now, here's the good news. University of Michigan does this thing called the Consumer Sentiment Survey. It's one of the most studied surveys. It's one of the most referenced consumer sentiment surveys from economists across the globe. And there's a intangible part of this. So from the economist perspective, there's a tangible part, a numbers part, a modeling part. But then you have consumers who have a feeling towards how the market is going. And a lot of people make decisions based off of feelings. Most people are not making decisions based off of logic. So what happens? Well, we had an election. It was a sweeping win. A lot of blue states turned red, regardless of where you sit on the political spectrum. Doesn't really matter. It's the circumstance we're in. We don't care. We don't focus on the circumstances we can't control. But it did turn red. It was clear that the sentiment was, we're tired of what was and we want something else. So they got what they wanted by and large. Obviously, there are people who aren't happy, but at the same time, largely the voting system was effective and regardless of where you're getting your information from, it is showing red across the board. So people got what they wanted, which creates a feeling of, hey, we're in the right spot. We're heading in the right direction. And because of that, you'll see a pickup in transactions. You'll see people willing to spend some of their money and make the bigger purchases. And even if you don't see some crazy meaningful economy that like grows exponentially, even if it stays relatively normal, people have become accustomed to where we are today. It's been a couple of years. July of 2022 is when the rates started to go up. And now everybody's kind of used. It went up to 8% in October of 2023, I believe, and it has come back down to 7. People are just used to it. So people are now becoming accustomed to this being the environment that they have to operate in. And I think you'll see some positivity in the marketplace. I don't think transactions will go crazy. I don't think deals will be flying off the shelf like they were a couple years ago, because that was unprecedented. But you're going to see more activity. You're going to see more action. And you have to understand the current environment that you're operating in. Pay particular attention to what your competition is when you're listing a flip on the market, or when you're negotiating a deal to wholesale it, or you're negotiating a deal because you're going to burr it. You have to pay attention. What's going on with the rents around it? Use recent data. Recency of data has become more important than ever. 3 or 4 years ago, when the market was ascending at an unprecedented rate, you knew that the market would help you if you made a mistake. Today, that's not the case. You've got to be a professional. You've got to be an absolute professional. So I hope that this has helped you. I want you to get focused, make your plan for 2025, and it starts now. So you got to get to work now. There's a great opportunity to dominate the marketplace over the next couple of years while people are sitting on the sideline. Hey, are you still there? Hey, I don't know if you guys know this, but I'm getting a bunch of the best real estate investors together throughout this year in a mastermind group, people just like you, doing deals, committed to growing your real estate investment company. So if you are here and you're with me and you want to get in a room of amazing investors doing multiple deals every month, 30, 40, 50, 100 deals a year, and you want to be in that room, hey, just send me an email to my main email at info@sevenfigureflipping.com. Talk soon.